Hello and welcome to another update video about Polygon MATIC. So Polygon MATIC continues to be, a little bit, let's say, difficult. It's still one of the, let's say, best looking charts we've got out there. But in the short term, there seems to be a momentum that is going to push the chart further down and the price. So you will remember that we talked about the potential of that wave 2 has ended actually here. When we hit the support area for the first time here, the 50% Fibonacci retracement level at 70 cents, Polygon had a chance to break out. And however, we only saw 3 waves. In such a move to the upside, they can always fail at 3 waves. And if they fail at 3 waves and we don't get 5 waves, then you're probably going to roll over. And again, what would have been here a place to enter the market? The place to enter the market here, and you would be in massive profit still, was here, the support area. So not buying anywhere here, because then there's always the risk that if the wave 5 isn't going to make it, you're very quickly going to be at a loss. But buying in the support area, that is sort of how the Elliott waves can be used. Finding those support areas, finding those fibs where the market is going to react to and is going to reverse. Now, irrespective of if this is really going to be a bullish breakout or if it's just a 3-wave corrective pattern, which will eventually come down once more in another move to the downside. If you buy here in support, then you would still be in massive profit and could nicely take some profits now, right? So just to highlight that really. So there's 2 possibilities here how this can be played in terms of a long trade. So the first possibility to enter here was here. And for me personally, the second possibility, well, it would have been here a 1-2 setup here. Sometimes they are difficult to see when you're just in them. But here we had a nicely defined reversal area, very clearly defined that was. We even had a target area in the target area to define that even more clearly, where we're probably going to turn around. But even if you miss these 2, then the point is sit it out until we get a 5th wave, if we get it, until we get a 5th wave. This would then form a wave 1, and then in the wave 2, I would personally get quite aggressive again. Okay, but these are the possibilities, right? And even if the 3rd wave, if it fails here and it's going to break down, you're still going to be in profit all the way until you come all the way down to 70 cents again. That's sort of the strategy here with this chart. I always try to make that clear because this is the support area. These are the areas where you're going to turn around with a high likelihood. Now there's never a guarantee you get afterwards your 5-wave move, but exactly because of that, even if you get a 3-wave move, it's still worth taking some profits, right? So I personally would start to take some profits here because this for me looks like we are heading down, and should it rally to the upside, then I would just go in here again, right? Because nobody got poorer from profit taking. Buying here is probably the worst you can do. Buying at the top of a possible wave 3 isn't gonna work. In resistance, shorting, in support, buying. At least that is my strategy. I'm not a breakout trader, I'm a pullback trader most of the time. So why do I now say we're probably going to come down? Because we probably come, it's probably going to work out to the downside now. Why? Because you will remember a few days ago I told you if you break below 80 cents, it's probably going to come down. Well, we broke below 80 cents, below 80 cents, which was the 50% fib level, broke below that. This can still work out as a leading diagonal. So the bullish potential isn't gone. Therefore, my strategy would be taking some profits, not all of it, and if it goes higher from here, then I still have something on the table. If it doesn't go, then I could even set my stop loss lower and get stopped out or whatever, or I just leave it in for the next rally. But I think it has become less likely to now push to the upside, especially as we are not yet reclaiming or we just don't try to reclaim at the moment the trend line again. So I think this is probably going to roll over, and the primary expectation would be lower prices now here in a wave Z to the downside, that we come down here in basically in the Z wave. I mentioned it a few times before that this could become a more complex correction at WXYXZ, and in that case we have a good chance to get below 70 cents again, which would then be another entry point before we see that rally to the upside to 180. And in that scenario it would just mean that this wave 2 wasn't finished yet, and this is now my primary expectation until we as long as we stay really below the 84 cent level. Getting above the 84 cent level would change things potentially, but really a really good confirmation for the breakout would be the 95 cent level now. Yeah, this is just getting too weak now, so I would really want the market to prove that we are in the bullish scenario by breaking above 95 cents. I guess until then I will focus further on the downside here. I hope that little discussion about strategy was helpful, because that's normally how you play. There's no way, if you bought in these 1-2 setups here, there's no way you would be at a loss here. So even if a wave 4 retraces more, or even if the wave 3 retraces more than would be ideal, there's no way, unless you really bought here close to the end of a wave 3, chasing the green candles, which I personally always try to bring across that I would not do this. Okay, so hopefully that was useful. Let's see how the next few days are gonna develop. Hope you liked the update about MATIC. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.